Dumela Bagolo, it is I, Nicole Mjoli, for those of you who don't know me, and for those of you who do, welcome back, ladies and gentlemen. I hope you guys are doing well, because I am doing great, and I've missed you guys, but anyway, that's not so important. Firstly, I'd like to say thank you for 500 subbies, guys. It means so much to me that you guys are enjoying the content and most importantly learning from the content. Anyway, guys, I'm back with a dreaded topic, right? Tax for investors, to be more specific. And this is a conversation that we don't really like having because we don't like people taking our money and outdoing it. Anyway, I'm here to break it down for you guys with a little mini series, tax for investors, right? So I'll be doing a few videos to explain to you guys how it's gonna work or how tax for investors works, right? Anyway, guys, if you do enjoy the video, don't forget to like, share, and subscribe. And always remember, guys, check the description box. Don't forget, guys, this video does not constitute financial advice. If you are looking for financial advice, please speak to a registered professional, not Borona. So we're just sharing information with you guys. This video is just me sharing info so that you guys can learn. If you want to learn, take it, leave it, do whatever you want to with it. Anyway, let's get into it. Alright, so firstly, let's start by asking the very important question: why is it important for us to know the different types of taxes that apply to investors? Okay, so it's important to know because when you are choosing the investment vehicle or your investment options, you want to know obviously what your returns are going to be, but a bit more importantly, if I can put it like that, you want to know what your return on investment will be after tax, because remember that these different types of income are not taxed the same more South Africa. So it is important for us to know how something is taxed before we invest in it, right? And obviously another reason why you want to know how something is taxed is because you don't want to be surprised. SARS is low tax for the dividend, or SARS is low tax for the capital gains. You need to know these things before. You don't want to be shocked for yay! These people, they want my money. Why do I owe SARS so much? And if you owe SARS money and it's a lot of money or a little money or whatever, you might be fined if you don't pay them, or you can actually go to jail if you don't pay them. SARS is that guy or that girl. So please do your research before you put your money somewhere. SARS also wants a cut of the pie, right? But then again, SARS is not that bad all the time. Sometimes they do give us, a little benefits or the exclusion or the exemption or whatever you want to call it. Sometimes they do say, hey, Fafa, here's a little money that you don't have to pay tax on your own money, but anyway. Or sometimes they might say, you don't need to pay tax on a certain portion of money, or there are specific accounts where you're not taxed as highly, or you're not taxed at all from the profits you make on that money, right? So what are the three different types of incomes that Rona as investors are taxed on? Okay, so firstly, you get your interest, and that is taxed, yes. And then you get your dividends, which a lot of us like, right? And then we get your capital gains, right? And your capital gains is basically, when you, let's say you invest in a company, 100 Rand, and then after 5 years, your 100 Rand has grown to 500 Rand. That 400 Rand will be the capital gain. Like the capital which you invested has gained money. It has grown. It has become that girl or boy carrying muscles, right? So yes, those are the 3 main types of income which investors are taxed on, right? So obviously, as an investor, there are ways in which you can reduce or avoid your taxes, right? Legally so, by the way, right? So one of those ways in which you can do it is by having a retirement fund. Another way is through tax-free investing. If you don't know what that is, please do go and check one of my previous videos, tax-free savings accounts, on the channel, right? And then another thing to remember is, as an investor, not a trader, as an investor, please know the difference between the two. I think I do have a video on my channel as well, explaining the difference between investors and traders, right? So do go check that out if you don't know what that difference is, right? So as an investor, you should not, obviously there are T's and C's that apply to this, but you should not buy and sell your shares regularly without knowing the tax implications behind it. Because remember, as soon as you sell a stock or an ETF or whatever, as soon as you sell it, that man upstairs, aka SARS, they know about it. So you can't be like, no, I'm gonna buy something and then I'm gonna sell it tomorrow and I'm gonna take that money and that interest and I'm gonna put it there without knowing you're actually gonna be charged tax on that interest which you made, right? So you need to know the tax implications before you buy and sell shares regularly. Don't just think no, SARS only knows I have made profit or loss whenever the money is deposited into my bank account. They know as soon as you sell. And then obviously the last thing would be you must know how something is taxed before you invest in it, right? So like I mentioned throughout the video, different incomes are taxed differently. So you need to know how it's taxed, and that will help you in reducing or maybe saving something through or from your tax, right? So guys, I think I'm gonna cut this video here and then I'll bring the other videos after this one. Anyway, I'll see you guys in the next one. Bye.